Hi, thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar or a combination of that with headline news or geopolitical. And then sometimes even it gets a little even more confusing out there when the market sentiment changes, when good news is now bad news. And somebody who's just kind of watching this may be a little confused as to what's going on here. We kind of like to get into the discussion and try to get that information out to you. So if you're looking to refinance or purchase or buy a property, hopefully this will give you the information you need to try to make an informed decision, whether if you want to lock in a rate or if you want to kind of hold off and try to see if they improve or not. A little bit about myself is I am a loan officer. I do work with a national lender. We do help out with a lot of people across the whole U.S., all 50 states, with their purchasing needs. If it's a pre-approval to buy a next property, finance the next property, or run numbers and help them with their refinance needs as well. We're here to help you guys out. We'd love to earn your business as well. But more than that, we are here to act as a resource. So if you guys got questions about anything, please reach out. We are here to help. Without further ado, we'll jump right into what's on the economic calendar today. A minor report that comes out on a weekly basis from the MBA, which is the Mortgage Bankers Association, and that is their mortgage loan activity report. It kind of indicates as to from one week to the next week if refinances and purchases are down. So as we can see here, purchases are down, but still showing pretty resilient numbers here. MBA refinance, of course, with the higher rates, they've also kind of come down as well. But the big one probably for this week is right here, the FOMC minutes. They were just released a few moments ago, about 20 minutes ago here, and that's going to be the big one for today. Well, it did become pretty big thing here, and we'll touch on how it's affected mortgage-backed securities. But stocks are also negative territory as they're bracing to read it. What it comes down is that they are looking after the May meeting. We'll probably look at half basis point hikes. We'll also look at $95 billion worth of reduction in the balance sheet per month. And then at some point, once it's underway, will probably even be sell-offs of mortgage-backed securities, which could add more pressure on mortgage rates at that point as well. We may see that later in the probably second half of the year. So stay tuned as to what might drive that, but that's what's kind of been giving us a bit of a seesaw today here. So speaking of such, let's go ahead and take a look here at the mortgage-backed securities and show you. So we started off down here. We did come back. It did subside just before the 11 o'clock is when the came out. We went out up to actually slightly a positive territory, and then since then we've just come dropping back downwards. We dropped quite a bit down to about 23 basis points. Looks like it's subsiding again between 14 and 16 basis points. So a lot of movement since the minutes came out, and we got a really bad reaction yesterday. We ended up closing down 86 basis points yesterday. So right now, what does that mean? We're down about a point over the last 2 days of market activity here. So we're down about 1 point in terms of what a loan would have cost, and so we did have some price improvements as we're down here and came up, but we could see potentially worsening again. They may come back and reprice for the worse, and that's what we're seeing right now as we're down about 16 basis points. Now the 10-year Treasury now is up to about 2.62%, which is now greater than that of the 2-year. The 2-year is at 2.53, and so we're back to inverted curve. Yesterday we're out of the inversion, and then we're back into it today. So that's kind of putting a big clamp on things. So where things are at. So mortgage rates, of course, what does that mean? Mortgage rates are kind of worsening again. We did hit the 5% mark, so we'll look at that here in just a second, or look at it right now here. So this is the average for 5.08 for the 30-year fix, and then the 15 years at 4.28, and that is for the average conforming loan limit with points added to it, what the average rate would be across the U.S. here. So, and this is brought to you by the FHFA on there as well. All right, folks, not the greatest news. We're hoping to get improvement as the markets were improving just before the release of it. Of course, after the release of the minutes and they reviewed it, they just went back into the toilet again. All right. Well, thanks so much for watching. If you guys like these videos, please smash that like button, subscribe, and share us. We greatly appreciate it, helping us get it out there. We appreciate you guys. But again, if you guys got questions about anything, please reach out. We're here to help. You guys have a great rest of your day. Thanks for watching. We'll see you guys in tomorrow's video. Bye bye.